Dan here back with G2 Jake. Welcome to part three of our One Big Beautiful Bill podcast series.
Hey Dan, great to be back.
You got it. For our new listeners, in episode one, we gave a high level overview of the bill's impact. In episode two, we broke down the urgent, time sensitive benefits for individuals. Today, we're focusing on opportunities for business owners and strategies for multi generational planning. Jake, let's start with a few tax tips for business owners.
Of course. Dan, for business owners, this bill is really a game changer. Also, we do have some short 1 minute tax out tips every other Thursday on our WMGNA Instagram, Facebook, LinkedIn, and Twitter. So be sure to go give those a follow. First, the 20% qualified business income deduction, also QBI for short, is now permanent. This provides long term tax savings for pass through entities such as sole proprietors, partnerships, S Corps, independent contractors, and qualifying 1099 earners. This means that if you earn $100,000 in qualifying business income, you can deduct 20,000 of that, which if you're in the 37% tax bracket means that you will save $7,400 in taxes. Also, 100% bonus depreciation is also permanent, which allows businesses to immediately write off the full cost of eligible assets in the year they're placed into service after January 19th of 2025. This means that even if you made a purchase earlier in the year, it may still qualify for this benefit. Eligible assets must be tangible and used more than 50% of the time for business purposes. There are some special rules for things like vehicles and stuff like that. Also, for those in innovation, immediate expensing of domestic R&D cost is back beginning January 1st of 2025. So no more amortizing over 5 years. Businesses that had domestic R&D costs between 2022 and 2024 may still be eligible to recover these expenses. These are huge incentives for growth and investment. And lastly, if you're planning to sell your business, there have been some changes to qualified small business stock. There is now partial capital gain exclusion if the stock is held for at least 3 years, as opposed to the previous all or nothing 5 year requirement. Also in 2027, you can shield up to $15 million in gains from federal capital gains taxes with the proper planning. I think that pretty much covers it, Dan. Are there any opportunities for folks with multi generational planning?
Really great stuff there, Jake. And yes, there are some incredible opportunities for multi generational planning for families. First, the new bill permanently sets the federal estate in gift tax exemption at a much higher level, 15 million per individual or 30 million for a married couple, indexed for inflation. This is a huge relief as many feared this would be drastically reduced just starting next year in 2026. On top of that, the annual gift tax exclusion has been increased to a generous $19,000 per recipient. Here's a savvy strategy, folks in high tax states, the SALT deduction. With the new $40,000 cap, we can use multiple non grantor trusts, which are considered their own tax entity, to stack this deduction. For example, instead of one trust with a single $40,000 deduction, you could potentially have four separate trusts, each with its own 40,000 deduction. This is a powerful way to reduce tax liability for families with significant assets. And finally, some great news for education. The bill provides new ways to save on taxes for family related expenses. Employers can now permanently provide up to $5,250 a year in tax free student loan repayment assistance. The law expands what qualifies as a tax free distribution from a 529 to include things like tutoring, testing fees, and educational therapies for K to 12 students. And the annual K to 12 withdrawal limit from 529s has been doubled to $20,000, providing more flexibility.
That's awesome, Dan. Some individuals may have even took some preliminary actions based on that gift tax speculation. This really enforces why we always advocate planning under current laws and only adjusting once legislative changes are confirmed. Taking action based purely on speculation can unfortunately lead to irreversible decisions.
Spot on, Jake. Whether it's in the stock market or what's going on with our friends in Washington, you have to pay attention to policy, not politics. Focus on what you can control, saving on taxes, minimizing expenses, and maintaining a well diversified, low cost investment policy based upon your goals. We've gone a little over our usual time, but this was a comprehensive series that needed the detail. If you or someone you know could use a personalized conversation to save thousands on taxes and other financial expenses, simply get in touch with us because at WMGNA, we figure it out for you.